Brad Williams, Frugal Finance, corporate actions by public companies, what you should know. What does that mean? A publicly traded company has endless reporting requirements. I won't go into many. That fits under these corporate actions, and I'll explain. When you invest in a stock of publicly traded companies, something comes with the package, corporate actions, which may affect a company's stock and therefore its shareholders. Corporate actions can range from making a change to a company's name to issuing a dividend or making a major restructuring of the company through a merger or bankruptcy. Some of these actions, such as merger or bankruptcy, might make headlines if they involve large, well-known companies. Other changes, such as a stock symbol change or a dividend payout, might not make headlines but are important for investors to be aware of. Here are 6 common types of corporate actions and how they might impact your investments, name or trading symbol changes. These changes will appear on customer account statements and in account holdings. The company might make these changes to reflect its business focus on ownership more closely or to distinguish itself from other companies. These changes may require the company to get a new QSIP, the unique 9-symbol identifier assigned to most financial instruments. Check out, no FINRA did not approve that security for trading. Stock splits. A stock split changes the number of shares owned by each shareholder, but does not affect the shareholder's proportionate equity in the company. For example, in a 3-for-1 stock split, a holder of 100 shares would have 300 shares of the stock split, but her equity in the company remains the same. I have a video on this. Check it out if you need to. A company may decide to do stock split to lower the per share price of stock. High stock price can intimidate investors who fear there is a little room for price appreciation. Conversely, a reverse split reduces the number of shares outstanding and increases the price per share. The company may do a reverse split to meet minimum listing price requirements for continued trading on an exchange. Dividends. When a company distributes in the form of cash or stock a portion of its earnings to shareholders, it's called a dividend. A cash dividend gives you a sum of money for each share owned, and a stock dividend gives you additional shares in the company. For example, a stock dividend of 10% means that for every 10 shares you own, you will get 1 additional share. Companies with substantial retained earnings might pay a dividend to pass that benefit on to its shareholders. Mergers and acquisitions. A merger occurs when 2 companies agree to become one entity. An acquisition, on the other hand, occurs when one company purchases a majority of another company's stock, which can be either a friendly or hostile move. Mergers and acquisitions often involve strategic decision to limit competition, influence a certain industry, or grow a business. Rights offering. A rights offering occurs when a company issues rights to existing shareholders that entitle them to buy additional shares directly from the company in proportion to their existing holdings with a prescribed time period. Companies will announce an expiration date by which shareholders must buy in to the rights offering, generally 1 to 3 months from the date the company announces a rights offering. The price at which each share may be purchased is generally at a discount to the current market price. Rights are often transferable, allowing shareholders to sell them on the open market. Companies generally offer rights when they need to raise money. Liquidation and dissolution. Liquidation is the process by which a company sells off its assets and closes down its business for good. In liquidation, the company assets are sold and the proceeds are used to pay off as many creditors as possible. Dissolution is the last stage of liquidation in which the assets and property of the company are redistributed. Secured bondholders get paid first and common shareholders are last in a line for any distribution of proceeds. Even when a company seeks protection under one of the relevant chapters of the United States Bankruptcy Code, its securities may continue to trade in the OTC market after a bankruptcy filing. A stock with a Q as the last letter in its trading symbol indicates that the company has filed for bankruptcy. FINRA's role in OTC corporate actions. Federal securities regulations task FINRA with processing corporate actions announcements requested by companies that trade in the OTC, rather than on national securities exchanges. Corporate actions reported to FINRA generally include mergers, a dividend, or other distributions of cash or securities, stock splits, and name and domicile changes. FINRA's processing function helps to keep investors and the market informed of company corporate actions. You can check all this out behind the scenes up here in these different links, and I'll provide this article below. So if you need to link to this and want to investigate, you can do that. FINRA is not responsible for approving or disapproving the actions the company is taking, and FINRA does not review such requests for companies' compliance with any federal, state, or other regulatory requirements. The public company is responsible for making sure their business decisions comply with all applicable laws and regulations. Corporate actions for exchange-listed companies are handled by the exchange upon which a company is listed, and information on these corporate actions is available on the website of the relevant exchanges. How can you find out about OTC corporate actions? If you own stock in an OTC company that is the subject of a corporate action, you want to check the daily list. The daily list provides valuable information. Well, let's take a look. Here's the daily list as of 3/12 this morning. You can see the long list, and there's 14 items here. You can check this out on your own. The daily list provides valuable information regarding corporate actions for OTC securities, including X dates, the dates that determine whether shareholders will receive a dividend, new issues, deleted issues, deletions, trading symbols, and name changes. The daily list also indicates if previously announced changes have been updated or canceled. Be wary of announcements regarding FINRA approval or corporate actions. Companies undergoing a corporate action often issues a press release of other communication, such as a tweet or other social media posts to provide details of the change. For instance, the company might announce a new corporate name that reflects a change in the product lines or business focus. However, in the past, some companies have used these publications to suggest that FINRA has somehow approved a corporate action, or that a corporate action will be effective once FINRA approves it. To clarify, this is not the case. FINRA does not approve corporate actions. Comment if you have any questions regarding corporate actions by public companies or any other concerns. Brad Williams, Frugal Finance. Hope that helped. Thanks for watching. See you soon.